Kuwait, renowned for its oil reserves, as well as having the world's first and one of its largest sovereign wealth funds, is undergoing a process of economic transformation and diversification. Located in the upper northeastern corner of the Arabian Peninsula, Kuwait is a member of the Six-Nation Gulf Cooperation Council, among other regional and international affiliations that it holds. Government policy is guided by Vision 2035, the country's roadmap for economic transformation, which is designed to empower the private sector, diversify the economy, create sustainable urban developments, nurture human capital, attain quality health and infrastructure, as well as sustain Kuwait's prominent international position. Kuwait's economy maintained resilience during the COVID-19 pandemic and is on the path to recovery, with the IMF estimating that Kuwait's real GDP will grow 8.7% in 2022, and the country is expected to remain on a strong medium-term growth path until 2027. As it looks to the future, one of Kuwait's key priorities for diversifying its export base, as well as creating job opportunities for young citizens, is to attract impact investment, particularly into the newly planned economic zones that will support the creation of competitive clusters in high-value industries. The Kuwait Direct Investment Promotion Authority, KDIPA, has been tasked with leveraging the country's favourable attributes to develop 3 distinctive economic zones that will increase the industrial asset base in the country. The zones are Al Abdali, near the Iraqi border in northern Kuwait, Al Naayem, 70 kilometres west of Kuwait City, and Al Wafra, 65 kilometres south of the capital, on the route to Saudi Arabia. The Al Abdali Economic Zone is intended to be an integrated trade and light industrial hub, with multiple land uses, catering for commercial and recreational facilities, as well as residential and labour accommodation. The economic zone is positioned as an attractive cluster for manufacturing of electric and transport components and equipment, waste management, logistics and warehousing, and high-quality retail services catering to niche markets. Its location close to Kuwait's most prominent oil fields should also make it an attractive proposition for companies operating in oilfield services companies and petrochemicals. When complete, it will utilise smart and green technologies to enhance digitalisation, economies of scale and sustainability, providing bankable opportunities for infrastructure and telecommunications contractors in the process. Furthermore, it is envisioned as a new northern gateway for international trade and integration in global supply chains. It is well placed for trade with neighbouring countries in the Gulf, the Near East and Eastern Europe, and connectivity will be enhanced further once the planned GCC railway and Mubarak al-Kabir port are constructed. The development of economic zones in Kuwait should contribute to achieving some of the country's long-term strategic goals, by increasing the contribution of the private sector to the economy and to raising the share of Kuwaitis employed in the private sector.